Team Cooper, your local preferred lender, and just wanted to go over this annual goals worksheet. I know it's a lot of information to take in, so I'm going to help navigate through this so you can start inputting the information. Of course, we're going to meet, go over all the details. I can answer any questions that you have, but you can always reach out to me. But I want to make sure that we're very clear on this tool because it is a very useful tool that's going to help bring clarity and it's going to make your business 10x. So ask questions. If you don't know, make sure you're reaching out to me. I want to make sure that we have this inputted correctly. And as your partner, we're a team. I want us to both be successful. And by building you up, it only builds our partnership up. So if there's anything that you need, please reach out to me and let me know. So let's go ahead and walk through this. This is going to be the income and volume goals that we want to have completed. And so we're really going to figure out what is the income that we need to make to reach our net income that's going to be our bottom line here. So we're going to be playing with these numbers, but what you need to find out is what is your average purchase price and what is your average commission. So stop this video if you don't know this. I want you to go and look at all of your last closings and then divide that by how many closings you had, and that's going to come up with your price as well as how much commission you made per deal. You need that information to move forward. So if you don't have it, I want you to stop the video, go get the information so that we can continue. Okay, so now once we have that information, we need to know what your commission split is with your company. Make sure you plug that in. This isn't going to take into account any additional fees that you're going to pay. We're going to put that in a different tab here in the cash flow tab here later. So right now we're just looking at what your split is, which is what you're going to put in here. That's going to give us the average net revenue that you're going to earn per deal. And that's going to tell us that we need 18.8 deals to make this $150,000 based on these numbers, which means that we need 1.6 closings per month. And then we need to know what your conversion ratio is. If you don't know what it is, I would probably go back and start tracking your leads to conversion ratio. And then I would update this number in 3 months based on what your actual conversion is so that you get a more realistic number. But you could start with, whatever you think your conversion ratio is. Everybody's different. There's some people that do a lot of online marketing, so their lead conversion ratio is really low versus somebody that's by referral that might be higher. So try to get a good indication of what it is, and then you can always go back after you've tracked and measured those lead to conversion, which we'll talk about later, and update this. So for now, we'll just say 75%. Now, if we look at number of leads required, that means that you need to have 25 leads for the year in order to hit your 18.8 closings that you need, which is your 1.6 a month. So you need to have half of a lead per week in order to achieve this goal. So if it's a week where you have nothing going on, you have no leads, you know that you're in trouble. You need to make sure that you're picking up the call or picking the phone, calling people, past clients, whatever your activities are, you need to make sure you're doing those so that you get those leads. Now, this is just a good indicator of what you want to contribute of your income towards your business development. So we're going to talk about all of your business development actual budget, but usually we kind of look at it and say, okay, 10% is a good number that I want to put back into my business to build my business. This number is not going to impact any of these numbers. This is just what you're setting your expectation for yourself of what you're willing to put towards that. Now, this number here, which is your budget developed or your budget that's towards your business development, this is from our marketing budget here, which is our cash flow. So once we get to this and we'll go over this and that's inputted, your budget will show up here. You don't have to do anything. So it's going to estimate this. For now, we'll just say that we're going to put 10% towards our development. So right now we're just saying that. If that's the case, let's say that we are willing to hire somebody. Let's say we have someone for $15 an hour that's going to work 20 hours a week. If you have someone for $15 an hour for 20 hours a week, then you're going to put that number in here so that we have that calculated out of our our gross profit that we have to make sure that we are taking into account what's needed for that position. So if this was $20 an hour or $15 an hour for 20 hours a week, that means the salary that you need to pay is $15,600, which means your net income based on this information right now would be $19,400. So what's really cool about this is, you need to bring in $150,000 based on these metrics in order to make $119,400. That's usually where people miss the mark is they say, I want to make $150,000. Well, that's great. You made $150,000 gross here, but after all the expenses, really you're only making $119,000. So then we need to go back and adjust one of two things. We either need to increase this number here, and then it's going to increase our number here, or we go back and increase our purchase price. So we need to focus on getting higher prices here so that we can get our net income up. So really it kind of helps us when we're going through our focusing here to determine, okay, what are we going to focus on? Do we need to get more deals, or do we need to increase our price, or maybe we create activities around both to get that number up? But we really want to be clear on this of what you're trying to get. So as you're going through this and completing it, make the numbers wherever you need to get to your net income. For now, just use the 10% or less, or whatever you're wanting to for all of your marketing expenses here. And then we'll be adjusting that later. So once you have this completed, now you're going to move on to this is what you're going to be in every single closing, every single month. You're going to be in this all the time. This is going to be your driving force. So what you're going to do is every single month you have a closing, or whenever you have a closing, you're going to go in here and you're going to input it. So up here you can see annual volume that you need per this first worksheet tab here at the bottom. Per this, you need to have that in closing in 18 units. Is what you need for your, go back here, back for your closing and your volume that you need. So you'll notice here it's going to say that you need 17.6, so it's going to round it up to 18. So that's what you need in your volume based on your numbers. And then what's going to happen is, as you could see, we could take out these numbers here, and let's say it's January 1, you start fresh, okay? So then what that means is that you need to have, so you need to have, oh, here we go. Okay, so that means you have 0 closings for 0 volume. And then what we're going to do is we're going to go in and say, let's say we had a file, Jones, that we closed, and the purchase price is $350,000. Okay, so now you're going to see up here that January it shows you closed $350,000 for 1 unit. And then you're going to put over here if it was a sell or a listing. If you don't do property management, don't worry about that. Just sell and listing. And then let's say that now you can see here that your numbers for the next month says that you need to close 1.66, 1.85, and it's going to tell you the volume that you need to close. So these numbers are going to change with every closing. So let's say now we are going to go ahead and change, we'll just say we have another one, and now this one came in at 400,000. Great. So now you can see that these numbers changed. Now you need 1.56, 1.74, and then your numbers here. And up here it's going to show you close 750 with 2 units, and your average sales price between these two is 375. You're always going to know what your average sales price is and your volume. That's what's so amazing about this. Now, let's say January's done. So we're done with January. Then you're going to go over here to the side. There's a little minus button. Click on that. It's going to close out January, and then you're going to click on the plus one, so now you're open in February. So around the hand side, you're going to see there's columns and plus and minuses. And then now you're in February, and so now you're going to go in and you're going to say, okay, Mary closed, 310. And we'll say it was a sell. And then now you can see your average price went down to 310. And you closed 310 for 1 unit here. So you're going to always know what your average price is in your listings, and then see all of these adjust. So it's going to tell you that, based on 0 closings, you get all the way to, you have no closings, you get to September. Now you need to close 4.8 deals in order to be on track to get to your closings that you need. If you go to the bottom, you're going to see here that it's going to show you your average, how many, or what your current is, production, how many you have closed, and your average purchase price. Huge, huge. Because then what you can do is you can take this average price, right? And you can always go in here and adjust it in here to see what you're on track to make. So you always know where you're at and what you need to increase or what you need to do. So that's in February. And then again, you're just going to go over here and hit the minus button, and then the plus into the next month. So you can open and close all of these so that you're on track and get a glimpse of it as well. Super, super exciting. I'm so excited for you guys. This is such a game changer. Totally changed my business platform. Okay, so now we get into a little bit more complicated information, and not complicated, just a lot of work. So here's what I want you to do. Before you even start this part here, I want you to pause the video, and here's what I want you to do first. I want you to go to wherever you have all the information of what you already expended last year, ongoing expenses, expected expenses, whether you need to go to a credit card statement, bank statements, wherever you need to go to get the information that you need. I need you to come up with everything that you think will be an expense that you need to budget for this next year. So before you continue on here, I want you to get that list together, go get the information, whatever you got to do, and then come back to this video. And that way, when you come back to this video, you walk through putting this information in. And I'm going to meet with you and go over this information. You can reach out to me and I can meet with you and go over this information to make sure that it's all the information's here and that you understand it. This is just a headway to get the information in, and then we could tweak it. All of this is going to be creative and original to you. Everybody's different. So if you don't do pop buys with your clients or with your partners or whatever, you don't need this section. Rename it. You could just take out pop buys and you could put in whatever you want. But if you do pop buys, you can leave that in there, and then you have all of your months here. Now, the section that is shaded, so the green that you see here all the way across, this is your budget line for pop buys. So these columns that are open is your actual expenses. The highlighted fields in all these categories are going to be what you're budgeting for. So if you say, yeah, I'm going to make it a point that I, do pop buys and it's going to cost me about $50 a month to do those is what I'm going to allot in my budget, then you could leave it in here. Now, once we get to marketing, you're going to take it a step further. And so let's say that in your marketing for February, you're going to do pop buys with Valentine's stuff. Well, you could choose to say, I'm going to buy all this stuff in January, or you're going to buy it in February is fine. But whatever you're going to do that's an expected expense, that's not just, I'm going to allocate $50 for whatever I do that month, you could put in here, right click, insert comment, and then you could just put in here, B-Day chocolates. And then you could put, $50. And the reason that you do that is that it's not in here yet because it's not an expense. But now you see this little red dot here. That means that you have a note in there that you need to address. So that means when you come in here in January or February, as you start your month and you're reviewing, you click on there and you're like, oh yeah, I got to get Valentine's Day chocolates, and that's what it's expected for. Now let's say that February comes and you're like, oh, I only had to spend $35. Well, great. You put $35 in, or whatever your receipt number is, for your actual cost, and then you'll know that you didn't spend as much. Versus if you spent $80, well, guess what? It's over your budget, which might be fine because maybe you'll make it up somewhere else, but it allows you to know if you're on track and you're tracking all of your expenses. And then in here, you have, $35 for your pop buy gifts, and you know that when you go back and look at it, it costs you $35 to do chocolates, so next year you'll kind of have an idea of how much that expense was. So you're always going to go through and do your budget. And if there's a specific month you're doing something specific or hosting an event or something, we're going to add a comment to make sure that on those fields that that we know exactly what we're planning for that month when we have to go in and do it. So I'm going to delete the comment for now because this is the master. So you're going to go through every single month. You're going to put in what you budget for that month. Now, if you don't do these, you just put 0. That's totally fine. You just go across and put a 0 in here, and then this total will shift. So if you see I put a 0, now it goes down for my total. This amount here is going to be your total budget for the year for whatever the category is. So my budget for this year, if I did $50 a month, my budget for pop buys is going to be $600. Every month I'm going to put in my actual expense, even if it's 0. And it's going to total over here the amount that is expensed. It'll be a 0. And then it's going to total down for all of the months, and it's going to show you what your total was for the month. So that way you can see your budget versus your actual expenses. So when we start business planning, which we should start in October for the following year, we're going to be able to reference back. Next year, we'll be able to reference back to this and kind of have a better gauge on what our activities are. What's really cool about this is it keeps us off of that shiny object syndrome where we want to go, oh, let's try this, let's try that, and keeps you on track for what you want to make based on what you've allocated for your budget. So it's easier for you to say no to something that's not included in here, knowing what you're looking at for the year. So you're going to do that for each category. So you can change this category to something else if you want, if there's something that's not on here, or keep that category. Then you're going to have events. So there's some different events that are on here that you could do, and you're going to plan those events in your marketing calendar, which we'll talk about. But you're going to put them on here for your budget. So let's say that you decided to do a ice cream social, or let's do a client appreciation. And you're going to do that client appreciation in March, and you know that it's going to cost you probably $500. Well, what we may want to do is go in here and place a comment, and it's going to say March client appreciation, and you're going to put $500. Say it's for the venue or whatever expenses that you're going to need. Now you'll notice I didn't put it in March because I'm paying for it in February to book the venue or whatever it is that I need. So the actual expenses here, and then when you do spend it, let's say it was, $500. Well, you put it here. So you can see that you put in your budget at 500, so you met your goal. You're at 500. But you want to know what you're planning for the year so that you have an idea of what your budget expenses are. So you want to go in and add those notes and those comments and all of the ones where you have expenses. Now, if you don't have any, put 0 if you don't have anything going on. Same with coffee, lunch, networking events, really tracking those and knowing what your lunches are, what they're for, who you're going with. You can put in a comment and say, I know I'm going to go with so-and-so on this date, or as it comes up, special lunches that you have or BNIs that are continuing monthly lunches, you're going to put those in as well. Technology, if you have your CMAs and, Metro list and all that kind of stuff that you have, you're going to go in here and put that in here. You can go in here and you could just right click on a column and you can put insert. And now you're going to have another column. So if you need to have another column in order to add more information, you can do that so that you can add more in technology if you have a lot of technology. Oops, let me go back here. Yeah. And then again, you're going to put in your budget. So if you have CMA, that you pay, $100 for, then you just put $100 all the way across for CMA. Now, let's say that you have CMA and then you have some other technology, and in this month, it's going to equate to not just 100, but it's 400 for everything. You put 400, and then again, you're going to add comment, insert comment, and you're going to put what it's for. You're going to put $100 for CMA, $50 for this, for this, total of $400. That way, you know what you budgeted for in that column. And then your total is going to come down here for this technology. And then as you input the information, it's going to tell you your actual. Same with memberships, dues, promotional, professional development, miscellaneous. This is going to take you some time. This is what cost me took me the most time to complete in my budgeting. But let me tell you what, once I completed this and I looked over my expenses, it made me shift a lot of stuff. It made me realize where I was spending my money. I had no clue on some of the stuff that I had outgoing that I was spending. And so it makes you really pay attention to your return on investment and know what your outgoing expenses are that are expected, and then properly allow you to come up with your goals and your actual income, net income, after all these expenses. So if you pay a home warranty under a contract, so let's say you're in contract, you pay for the home warranty, and let's say it's $450. Well, if you need to close 2 deals a month, then you need to also allocate in an expense home warranties, and you need to put $900 and then put in comments 2 home warranties, because that's also an expense that you need to be prepared to pay. So every expense that you can think of that is business related needs to be on this spreadsheet. Let's say that there's something that is, let's say that it's a quarterly expense. So let's say that you have coaching, right? And you pay your coach, which I highly recommend everybody have a coach. You need accountability, but you also need a coach to push you forward. You may think that you don't have the money to do it, but you really don't. You can't do business well without it. So I highly recommend it. But let's say that you pay coaching, and let's say that it's, let's say every quarter you pay $2,000. Okay. So I put $2,000 quarterly. And that way I know that it's a quarterly expense. And then I'll go in here and let's say this is the first one that I pay $2,000. I'll put $2,000 as the expense, and then I'm going to go in and I'm going to insert comment and I'm going to put quarterly coaching, 2K. Right? So that next time that I come in here and I'll know what that expense is. And then also I could put it on my budget knowing that it's going to be every quarter and that it's accounted for. And then here I know that it's a quarterly payment, and you can put it here. If it's annual payment, I put annual payment due in February or whatever month it is. And then I put it on my budget for whatever that month is so that I know it's there. And that way when you resort back to this next year, when you're pre-planning for the next year, it's going to be so much easier for you to take the information and content and build it into next year's. So by getting a solid foundation not only helps you this year, it's going to help you every single year after that. Just know you're doing the most work this time. And then each time after that, it's going to be so much easier for you. So you want to get this completed before you move on to the next step as much as you can. And then once you're completed with this, you're going to go on to the next step, which is marketing. But pause the video and do the work before you go to the next section. So now when we get into marketing, we need to get clear into marketing. And this is where it becomes really, really clear to where you are, you know what you're doing, you know what you're working on. Now, of course, there's going to be times where this is going to change. You're going to tweak it. That's totally normal, but you need to have a plan. And so what's important about this is to have all of this filled out for the year, and then you can go back and tweak it as needed, because you're also going to need to take this into account on your cash flow budget. So for instance, January, my goal for closings in January is 1.5. Now note, let's say you go back to here and you didn't close anything in January. If you didn't close anything in January, the number is going to be higher for the next month that you need to close. So make sure you add that to the marketing calendar when you go into the next month. So right now I'm saying 1.5. I want you to write down how many calls you plan to make in January, how many activities that you're going to have, and how many referrals that you need for the month. So you need to know what your monthly referrals are. You need to know how many calls you need to make a month, which you could break down to week and daily. And then you're going to track them and know what those are each month. Now we'll talk about the monthly or the daily tracker, which will help you go back and look at all these numbers. So don't get overwhelmed. It is very smooth once you have it going. Pop buy ideas. So if you are going to do pop buys, write it down here what you're going to pop buy with so you don't have to think about it later. January is usually cold season. So you're going to pick up some hand sanitizers and tissues, and you're going to go buy clients and customers, partners, or whatever, and have them with you, and you're going to do your pop buys. You're going to have them on hand and just say, I know it's the season, so here's some hand sanitizer and some tissue. Silly things like that actually make a big difference. So same with Valentine's Day. Obviously, you're going to have chocolates. So come up with the reason for each one that you can have a pop by idea. That way you don't have to think about it. And then you're going to go in and you're going to put into so for hand sanitizer and tissues, depending on how many pop buys you are, then you'll go back in here and you're going to make sure that it aligns with your budget. So does $50 allow for that? Yes or no? If so, then you're going to write a comment in here and you're going to put hand sanitizers and tissues in the notes, and then you're going to put the amount that you think it's going to take and make sure that aligns with the budget. So again, when you go in here, you know what you need to buy, or your team needs to buy, whoever you have doing that for you. And then the B2B endorsement, I highly recommend that you have a sphere of influence around you in different businesses, whatever it is that you have that are close to you or build relationships or want to build. CPA, financial planners, contractors, gardeners, whatever it is. Make sure that they know that they're going to be the endorsement, meaning that you're going to share their information and why somebody should use them. And, so January, you bring up a CPA or tax person, or January, February, and, do a quick video with the person, a CPA or tax advisor saying good tips, something of value, that's, why they need to use CPA or tax person, or what they need to keep top of mind with CPA or tax advisor. And then you let the B2B endorsement that know that you're working with, hey, you're in my circle, I'm going to endorse you. The expectation is that we're partnerships. And so, I really want to see that we're referring back and forth. I'm highlighting you, and I expect that, you keep me in mind as well. You want to have that circle of influence that's there. So you're going to have them as your endorsement, and you're going to do a quick video or some type of endorsement on social media and when you talk to your clients as well. Now that brings us to reason to call. Most of the time, the reason that we don't make calls is because we don't have a reason to, or we don't want to be like, hi again. We get so, fixated on not wanting to be a burden, but we need to focus on item of value. So if we're looking at tax and CPA, let's say for the endorsement, it's easy enough to say, okay, January is about tax season. So I'm going to create a checklist, or I'm going to find a checklist online and tips, and I'm going to send that to my client. And that way you can call them and say, hey, just want to let you know, I sent you an email, have a checklist and tips for your taxes. Now that you're a homeowner, now that you moved up, now that whatever the reason is, I want to make sure you have that information on there. By the way, do you have a good tax person or CPA that you use? Great way to get them introduced to your endorsement partner and build that relationship referral system. So you already have your reason to call, easy to do. And depending on how you have your follow-up system, you need to just make those calls and you have a reason. Now send Mel the item of value. So that's going to be your tips and your checklist. So you may not call everybody, for the reason to call that month. You're going to call whoever's on your call list. But you can send out Mel to however many people you want to do, or however many people are in your sphere of influence, that item of value in the mail. So they're getting a piece of mail. Then you could send an actual email to all of your sphere of influence with that checklist and that endorsement to the B2B if you want. But it can all be related to the same topic, but you're sending out this item of value. So if you have this all in there, and then you're going to go on your calendar and you're going to time block. First Tuesday of the month, you're going to time block time to send out the item of value, or to have put it on your team members' calendar to send out the item of value and to who to send it to. And then you're going to have on the 15th or whatever day, second to whatever you choose to do, that you're going to send an email with the item of value. And you already have this item of value picked out. I would recommend, if you can, to get the item of value in a folder as soon as possible. If you could do it all by the end of the year and have it, great. Have it there so it's one last thing that you have to worry about. Are you going to do a client party, a business mixer, any other events? If so, you're going to put them here and when. And then again, you're going to go back to your cash flow business and you're going to go to that month, and whatever section that it may have an expense for, you're going to put that in, and you're going to add the comment as well to know that that's what you're anticipating for your marketing calendar. So you're going to go through and you're going to do that for every month. I would recommend, if you're doing mixers and stuff, to spread them out. Think about things such as school starting, ending, people being gone. The worst thing is to, have an event during a time where no one's going to show up. So you want to make sure that you have it during times that are going to be relevant and that are going to matter. And then you're going to make sure that you are not coordinating time that you plan to be off. So make sure you keep your vacation that you're taking off as well top of mind when you're building this calendar. So after you build this calendar, you're going to make sure all of the expenses that are expected are on your cash flow analysis, which is here for your business expenses. And then we're going to look at weekly tracking. Now this you could choose to do or not. If you don't, just take it and drag it to the end. You don't have to have it here in the front. This tab you could just move to the end. But if you like looking and tracking your measures and your points, and there's a certain point system that you want, to meet, you like going through these checklists, then absolutely look at this. If not, look at it, because there's a lot of great ideas on here that are going to help you with your business. And if you need to work on specific areas, marketing, systems, selling, you can look at some of the ideas on here too. And you can, if you want, track, your weekly points if you're that type of person. Again, if not, just look over the ideas here, and then you can move it to the end if you're not going to use this. Now, let's talk about lead tracking. So we talked about our conversion ratio, right? On the first page here. So we talked about, what is our conversion ratio? Most people don't know. So we're going to develop that. We're going to find out what it is. So starting in January, you're going to see there's different tabs on here for different months. So in January lead tracking, you're going to go in here, and starting on Tuesday the 1st, you are going to track every single referral that you get. So let's say on Tuesday you get a call from Consumer Direct. You're just going to mark 1. You got 1 lead from Consumer Direct on Tuesday. You're going to do that every single week. And you're just going to fill in. You'll notice here starts on the 1st, every Monday 7th. You can go and put 8th, 9th, 10th if you want. But you're going to go in every week and you're going to track your referral sources. At the end of the month, I want you to go through and I want you to track, based on the month, where you're getting all your leads from. Where are you not getting your leads from that you're spending your time in? This is going to help you pay attention to where you're spending your time and maybe redirecting where you spend your time because you're getting more leads in a different direction. So you want to continually track these to know what your lead to conversion ratio is, but also where you're getting your leads from. So you're going to do this every month. So this will be January, and then there's February. So when you're done with January, you're just going to take it and move it to the very end of the line. And then you're going to move on to February. And when you're done with February, you're going to move February on to the end of the line. So you're continually going to be tracking your months. And when you're done with the month, you could just move it to the end. So if you notice, you go down, it's going to go, I did them all the way through December for you. And then there's a master in case you mess up or something. You could just recopy this one into a new month or something. But it's going to take you all the way to December for your lead tracking. When you're done with January, you can just simply move it to the end of the line so you're on to February. The other note is you can utilize this if you want, which is your referral status. So as you're getting referrals in, if you want to keep track on here of your referrals, you can. There's a spreadsheet here. I use a CRM, so I don't need to use this. But if you want to use this, you can. You're just going to put in the date and all the information here, and then where they are in process, so that you can continually look at this and make sure that you're on track. And then you can always resort back to this and figure out what's going on. I highly, highly, highly recommend that you have a strong CRM. If you need help with that, please let me know. I'm more than happy to help you with that as well. So you're going to track your referrals all the way through so that you can get your lead conversion for next year. So I know this is a lot of information, but one thing I wanted to point out is once you have this completed, your cash flow is completed, you go back to your income volume. You're going to notice that this number here is going to change. So your annual devoted amount is going to change, and your to whatever your actual expenses are that's on the cash flow, which is going to adjust your net income, which means that you are going to go in and adjust this as needed to get your net income. Now, keep in mind this is going to go off of what you have budgeted for your income too. So you're going to continually watch that and see if you need to adjust it. And once you have this completed, I know it seems like a lot of information, but once it's completed and you're just working off every month, looking at, okay, what's my production? Where am I at? What's my expenses? Where am I at? And what do I need to market on? You could do the things that you need to do, which is work on your business. So I'm here to support. I'm here to be your accountability partner, to partner with you so that we both can, do what we do best and help the people and the families that we can help and that we can continue our partnership. Thank you so much for your time.